What's going on, everybody? My name is Chris Butler, and in this video we're going to talk about the top performing stock market index ETFs that you can consider investing in depending on your particular goals and tolerance for risk. Spoiler alert, the top performing stock market index is not the S&P 500 and it's also not the Dow Jones Industrial Average, so be sure to stick with me to learn about some more stock market index ETFs that you can consider investing in. Investing in stock market ETFs has become a very popular strategy among buy and hold investors, partly because it's very easy to access the stock market these days with all the different brokerage firms and technologies that are out there, and therefore it's very easy to go and buy a share of an ETF and get invested in the stock market, not to mention the fact that you'll pay almost 0% in annual management fees when investing in the popular stock market ETFs. But what are the best stock market ETFs to invest in? There are thousands and thousands of ETFs to choose from these days, but in this video we're going to focus on a handful of the most popular stock market index ETFs, and we're going to focus on ETFs that hold all stock portfolios, so we're not going to get into more exotic ETFs that hold commodities or bonds or a mixture of different assets. So in today's video we're focusing entirely on stock market index ETFs. Of course, I have to say that past returns are not indicative of future results, but by looking at these different stock market ETFs and comparing their characteristics, we can make more educated investment decisions, and in some cases we can create more specific strategies depending on your particular age, your risk tolerance, or your investment goals in general. So to get started, let's talk about the index ETFs that I'm going to analyze today and talk about what those ETFs track, and then we'll look at their historical performance and discuss those results. The first ETF in today's discussion is, of course, SPY, which is one of the S&P 500 ETFs, and it is the oldest and perhaps the most popular ETF currently on the market. SPY tracks the S&P 500 index, which is a large cap stock market index that consists of about 500 companies across all sectors of the US economy. A large cap company is a company with a market capitalization or a public valuation of more than $10 billion. The second ETF in today's analysis is IJH, which is the S&P Mid-Cap Index ETF. The S&P Mid-Cap Index tracks companies with market capitalizations between $2 billion and $10 billion. The third ETF in today's analysis is IWM, which is the Russell 2000 Stock Market Index ETF. The Russell 2000 tracks 2,000 companies in the US that have small market capitalizations, and a small cap company is defined as a company with a valuation between $300 million and $2 billion. The fourth ETF is DIA, which is the Dow Jones Industrial Average ETF. The Dow Jones Industrial Average is another very well-known stock market index and is probably the most quoted stock market index, but the Dow Jones Industrial Average consists of 30 blue chip companies. The fifth and last index that we're going to use in today's comparison is QQQ, which is the Nasdaq 100 Index ETF. The Nasdaq 100 Index tracks the 100 largest international and domestic non-financial companies listed on the Nasdaq Stock Exchange. I have no idea why the Nasdaq 100 is hating on financial companies, but sometimes that's the way it goes. So now that we've discussed the 5 ETFs in today's analysis, let's go ahead and look at all of their performances stacked up against each other. As we can see here, from mid-2000 to present, the 3 top performing stock market index ETFs were IJH, which is the S&P Mid-Cap ETF, IWM, which is the Russell 2000 ETF, and DIA, which is the Dow Jones Industrial Average ETF. The S&P 500 and the Nasdaq 100 ETFs were the 2 worst performing ETFs through this time period, which honestly surprised me. Although we should keep in mind that QQQ, or the Nasdaq 100 Index, suffered a massive loss after the dot-com crash shortly after 2000. So with that huge crash, obviously QQQ had more ground to make up compared to the other ETFs, but nonetheless, over this entire test period, QQQ, or the Nasdaq 100 Index, was one of the worst performing indices of the whole group. So how did each of these ETFs perform from 2009 to present over the last 10 years? From 2009 to present, QQQ, or the Nasdaq 100 Index, outperformed all of the other stock market indices by a huge margin. The second best performing ETF over this time period was again IJH, which is the S&P Mid-Cap ETF. So now that we've looked at the performance of these popular stock market ETFs over 2 different investment periods, what are some of the takeaways from this simple analysis? The first and more interesting takeaway from this analysis is that while the S&P 500 is one of the most popular stock market index products out there, the S&P 500 was not the best performing index over both of the test periods that we looked at. Since 2000, the S&P Mid-Cap Index ETF, which is IJH, significantly outperformed the S&P 500, which is a large cap stock market index. Investing in mid-cap companies or companies with market capitalizations between $2 billion and $10 billion is considered to be the sweet spot between investing in small cap companies, which are much smaller companies with much more unknown growth potential, and investing in large cap companies, which are companies over $10 billion, which are already much more established companies, and therefore we shouldn't expect as much growth from those companies compared to smaller companies, particularly companies in the mid-cap index. So by investing in a mid-cap index such as IJH, you'll get exposure to mid-cap companies, which are not as risky as investing in small-cap companies, but you'll be investing in companies with more expected growth potential compared to investing in more established, larger companies that you'd get exposure to if you invested in a large-cap index like the S&P 500. As of this recording, IJH is currently charging an expense ratio of 0.07%, which means you'll pay $7 in annual management fees for every $10,000 invested into shares of IJH. But just because IJH has had such incredible investment performance over the past 10 to 20 years, it doesn't mean it's the most suitable investment for everybody, especially if you are an older investor and you're getting closer to your retirement, or you're just a more conservative investor and you don't want to be holding such risky assets like you would if you were investing in a mid-cap or even a small-cap index. With that being said, if you are an older investor that does have some stock market exposure, or you are an investor with a more conservative risk tolerance, then investing in a large-cap index ETF such as the S&P 500 or the Dow Jones might be a more suitable investment for you, because since those companies are larger cap companies and more established companies, they should not be as volatile as mid-cap or small-cap companies, in which case investing in a large cap index could be a more suitable investment if you are on the lower end of risk tolerance. Regardless of what we invest in, whether it's a large cap index, a mid-cap index, or a small cap index, we have to remember that when we're investing in the stock market, there's always the chance that we're going to have considerable drawdowns, such as in 2008 and 2009, when people lost over 50% of their stock market portfolios. But of course, over the long term, those things came back. So if you have a long-term mindset and you are a high risk tolerance investor, then investing in an index such as IJH, which tracks the S&P Mid-Cap Index, could be a great investment over the long term. Personally, I plan on investing in IJH, and I might even consider doing a blend of investing in a mid-cap and a small cap index, or a mid-cap and a large cap index. I'll do a separate video analyzing different allocations to the different indices, but for now, my plan is to invest into IJH, which is the S&P Mid-Cap Index ETF. If you enjoyed this video, please leave a comment down below and give the video a like to show some love. And if you have any suggestions for videos you'd like to see me do in the future, please leave those down in the comments as well. If you're new to the channel, please subscribe and enable notifications so that you don't miss any of my videos in the future. My name is Chris Butler, and I'll see you in the next one.